The Federal Reserve has just raised interest rates another 25 basis points, and Chair Powell has given us another informative press conference. We have three key takeaways from all of the information we've seen today, and they all tell us effectively the same thing, that the Federal Reserve is at the end or near the end of this very historic rate rise cycle. Now, first takeaway is that this is a market that simply does not believe the Federal Reserve when Chair Powell says base case, no rate cuts before year end. No, this is a market that says this Federal Reserve is going to be forced into cutting several times before we hit the year end. Now, this presents a risk. Either the Fed is going to have to admit that things are going worse than it had hoped, or the market is going to have to re-rate those expectations higher and recognize that the Fed may indeed have to stay on pause much longer than it currently expects. Second big takeaway is that the Federal Reserve has indeed incorporated the events from the past few weeks in the banking sector into their outlook. Chair Powell tells us this is actually a form of tightening, and the events that we've seen transpire in the last 2 weeks are equivalent to approximately one whole 25 basis point rate hike. Chair Powell told us it doesn't really matter where the tightening is coming from, they just want to see it. This is important because if we continue to see banking sector stress, we know that this will alleviate some concerns from the Federal Reserve and contribute to their desire to stop hiking and go on an extended pause. Last but not least, we did have a Federal Reserve that, in my opinion, appeared slightly less concerned about inflation. They still say, of course, that there's work to be done and they will have to continue to adjust policy to affect price stability. But Chair Powell was very clear that long-run inflation expectations, which we know the Fed watches very carefully, well, those appear well anchored, as he said. He referenced households, businesses, forecasters, and even market-based levels of inflation expectation. That's going to take some pressure off the Fed. So our big call for the Fed is, well, they might go another 25 basis points at their next meeting. It may be a pause, but going forward, we're going to spend a lot less time talking about whether the Fed will be hiking and whether or not the Fed will be on pause and when their next cut will be.